a sea of red across the board, with majority of these cryptocurrency altcoins falling between 15 to 40%. Many of you are probably wondering what on earth is happening at the moment, and unfortunately it does appear that the cryptocurrency markets are going to sustain another black swan event that we had seen previously. Let's not forget as well, back in 2022 we had a myriad of different events take place, from the lunar death spiral with Do Kwon right the way through to FTX tailing out the end of the year. And we've had many different crashes as well throughout the beginning of this year, with different fund managers, etc., all having to liquidate assets. The crypto space recently has not been in good shape. A majority of that as well is coming off the back of the economic policy, of course, being set in the States to combat inflation. We're seeing high interest rates, risk on assets are being hammered left, right and center, and things are appearing to only get worse. If we take a look at this, 10 US states have taken legal action against Coinbase for violating various different securities laws. Illinois, Vermont, Alabama, Kentucky, California, Maryland, Wisconsin, Washington, New Jersey, and South Carolina. The SEC has filed against Coinbase for violating these different securities laws. And it doesn't just stop there as well. Coinbase is not only being targeted, but Binance, or Binance.us, their obviously United States arm, is of course being targeted as well. Today, the SEC filed civil claims against Binance US in what is the latest example of regulation by enforcement under the current commission. To be clear, we believe the lawsuit is baseless and we intend to defend ourselves vigorously. However, we want to address what has become an all too common occurrence for entities and individuals operating in the American digital asset industry. For nearly 2.5 years, Binance US has engaged in good faith with the SEC. All along, the objective of our engagement has been consistent: work constructively toward a clear, practical regulatory framework that enables businesses like ours to grow, create jobs, and provide American consumers safe access to digital assets. Whilst we remain open to a productive compromise that protects our customers and their digital assets, this latest action taken against our businesses, and following similar actions taken against Coinbase, Gemini, and Kraken, as well as other market participants, the SEC seeks a near eradication of our industry. Simply put, today's filing is unjustified by the facts, by the law, or by the Commission's own precedent. The relief sought by the Commission would harm the very investors the SEC is charged with protecting. It would also stifle innovation and punish our company and industry rather than working to allow American businesses to thrive. We continue to call on Congress to step in and pass bipartisan legislation that creates a workable regulatory regime for digital assets and reins in the bureaucratic overreach of which our industry is the victim. Until then, our country's role as a leader and innovator will continue to be undermined. This is a really well-written response, of course, from Binance US. Many different pieces of information as well coming out. For example, we've seen that Gary Gensler, obviously the head or the chair of the SEC, that's obviously fighting a lot of these cases, has bones to pick clearly with different exchanges and elements of cryptocurrency space. We're trying to label everything as securities, but it's also come out that he actually applied, I think it was back in 2019, to be an advisor to Binance US's arm as well. It's not only that, in that the SEC are targeting exchanges though. In the SEC's lawsuits against Binance and other companies, we have seen different coins be listed or called securities as the basis of these lawsuits. So we can see Cosmos, the Atom token, Binance Coin BNB, Binance USD, and COTI coins have all been labeled as tokens in the these tokens have been labeled as securities in the lawsuit against Binance. Meanwhile, in the SEC lawsuit against Coinbase, these cryptos were named securities. We've got Chiliz or CHZ, Near, the Near Protocol token, Flow, Internet Computer or ICP, Voyager Token, VGX, Dash, and Nexo, some seriously big names there being labeled as securities. And then finally, across both of these platforms, the real shockers here were also labeled as securities. We've got Solana being labeled as a security, Cardano, Polygon's Matic Coin, Filecoin, Sandbox or Sand, Decentraland or Mana, Algorand, Algo, and Axie Infinity AXS. The major exemption though from these lists is Ethereum, which was notably excluded, which of course is incredibly interesting indeed. It does appear like they've gone after some of the biggest hitters across the industry. You know, a lot of these coins, for example, Solana, Cardano, and Polygon, regularly feature within the top 10 in terms of market cap, and then some other really big names in here as well. Of course, Algorand, Sandbox, Decentraland did very well over the last couple of years and have garnered an awful lot of attention and have very large market caps. It almost appears as if they are literally taking crypto by the throat, and they are willing to drag down this entire industry by whatever means necessary. Brian Armstrong, the current CEO of Coinbase, has retaliated, saying we will not delist any of those tokens deemed as securities by the SEC, and we have no plans to phase out any of our staking services. And of course, Coinbase have also reiterated that they will take the SEC to court and they will fight to the bitter end with their lawyers to make an example, or at least establish some better regulatory framework so the cryptocurrency ecosystem across in the States can continue to flourish going forward into the future. More interesting though, we're starting to see other exchanges already begin to delist these cryptocurrencies that have been labeled as securities, similarly to what we'd seen in the past with Coinbase. Of course, XRP being called a security with that ongoing case against them. Coinbase removed XRP, and we can now see Robinhood delisting Cardano, Polygon, and Solana off the back of this news. Furthermore, DeFi volumes have surged 444% after Binance and Coinbase lawsuits went live. So we can see from Finance Redefined, there's some information here. The SEC's enforcement action against centralized exchanges has hogged the headlines. The securities regulator is actively pursuing cases against the decentralized exchange ecosystem as well. Crypto venture capital firm Paradigm has slammed the SEC's approach, reiterating that DEXs are not securities exchanges. In another legal battle, a US district court has dismissed a lawsuit against DeFi protocol Pull Together. The community behind the protocol has funded its legal defense via a 1.4 million non-fungible token sale back in 2022. The DeFi market had a bullish start to June, but the momentum hasn't lasted long since the SEC enforcement action has taken place within the second week. Most of the top 100 DeFi tokens traded in the red, while total value locked fell again below 50 billion. That crackdown as well we've seen across the top 3 DEXs. We've seen a 444% increase in volume, and unfortunately majority of this volume is going to be selling pressure as people race to escape at the moment because of the sheer volume of uncertainty of what is taking place in the States. The US federal court has dismissed lawsuits against DeFi platforms, but centralized exchanges clearly are still main targets for them. Not only that, we've seen the Atomic Wallet hack as well lose up to $35 million, and on-chain sleuths are looking to see where that's gone. So at the moment, we've seen some dark weeks for cryptocurrencies across the board, and things may not get better for a short period. There is some more interesting information here talking about why majority of those altcoins have bled out significantly, even ones that weren't listed as part of the SEC's hit list. A fund called Scimitar Capital has apparently liquidated $2 billion worth of altcoins late on Friday night in the broad crypto sell-off that was rumored to, of course, be them. Our fund has made the strategic decision to liquidate our crypto holdings and return the capital to our esteemed liquidity providers, and we believe this move will provide enhanced stability and opportunities for them going forward. So really interesting here that we're seeing massive sell-offs from crypto hedge funds as well, potentially because a lot of their investors are getting spooked by what is occurring across the markets. It must be said, it is a very, very dark period at the moment for what is happening in the cryptocurrency ecosystem, and only time will tell to see how this plays out. Now, of course, it wouldn't be a video of mine without looking at Hedera. So we have seen a new all-time high for transactions per second across on the network. 10,592 TPS was hit. Now, this is, of course, a really interesting number as well, because many people talk about Hedera. We talk about the throttle that is currently live on the mainnet of 10,000 TPS effectively. And we need things like sharding and additional things to continue to increase the transactions per second. But of course, this was a very, very high figure for us to see, and completely blows the water, or blows a lot of other competition out of the water when it comes to transactions per second and volume. We've also seen a lot of activity on the testnet recently, which of course could be signs of new use cases going live. We've also seen a growing buzz around real world assets, or RWAs, in DeFi. As we explore the future of DeFi on Hedera, real world assets stand out as a significant opportunity. Andre Cronje points out that DeFi doesn't need a new trend because it is the trend. Real world assets fit perfectly into this view. They're not a shiny new toy, they're a logical progression of what DeFi can offer. So what are the use cases for RWAs on Hedera? From financial services to real estate, supply chains to carbon credits, art to healthcare, and stable coins like XSGD by StraitsX. The potential is very vast. Hedera, with its high-speed, secure, and fair infrastructure, provides the ideal platform for these real-world assets. And of course, this is something that I've spoken about many different times on the channel, and this is becoming a larger and larger narrative for why we will see in a minute. Low fees and high throughput make managing these assets more efficient than ever. Notably, projects like the Diamond Standard, of course, I did a separate video very recently talking about those, and Red Swan CRE are leveraging the Hedera network to bring those RWAs to the market in the coming months. The future of RWAs on Hedera looks very bright. As the network evolves, we can continue to expect an increasing number of these assets being tokenized and traded. This will only enhance the vibrant DeFi ecosystem that's taking shape. RWAs have the potential to thrive in decentralized finance, serving as a bridge between traditional finance and the blockchain world. This will expand the reach of DeFi and bring a whole new level of liquidity and inclusivity. SourceSwap as a DEX is at the forefront of this revolution. Our platform will facilitate the permissionless trading of RWAs on Hedera, opening up new possibilities for all participants in the DeFi space. SourceSwap there are confirming they will be looking to take advantage as well of the RWA opportunity that exists on top of Hedera, which is great to see. And then how can Hedera take DeFi forward? Transactions on Hedera are not only fast and less expensive, but fairly ordered. This eliminates toxic order flow like front running, which is common in traditional markets and DEXs on other networks. In conclusion, the journey of RWAs in DeFi is just beginning. With the power of Hedera, we are on the brink of a new era where DeFi becomes even more connected to our everyday lives. And of course, this comes off the back of things like in the second quarter, the US first fractional equity home funding program and platform has announced the equity tokenization of a $740,000 home on Hedera, with third-party investors supplying 97% of the purchase capital as alternative financing to mortgage credit using the Toko network on Hedera. So Toko is proud to collaborate with the Quarter Homes team to deliver this landmark moment in the evolution of finance and help deliver blockchain's promise of financial inclusion through real-world asset tokenization. The Quarter tokenization project is exciting and one of our favorites, as it represents tradable investment securities backed by the largest and most stable asset class on earth, owner-occupied homes. Investors will have the option to buy, trade, and sell tiny passive positions of homes on the Quarter network as an alternative to active whole home investment. And of course, we're seeing this take place on Hedera. This is really, really bullish in my opinion, and something that I spoke about almost 18 months ago as a massive opportunity on Hedera for the housing markets as a real world asset being tokenized on top of the network. And of course, this looks to be the case as it is taking place. Not only that, as well, part of Aberdeen's digital asset strategy, we have seen assets tokenization stakes of $16 billion in that market fund on top of Hedera. So Arcax, the digital asset exchange, has created a tokenized representation. So total value represented on Hedera has basically increased by £16 billion as part of its interest in the Aberdeen Standard Liquidity Fund. And of course, Aberdeen being a Hedera Governing Council member. So we are seeing an awful lot of stuff take place across Hedera when it comes to decentralized finance aspects of the DLT itself. Wrapping up the video, or the second to last thing I wanted to say in this video is, of course, HBAR Suite is now actually live. So HBAR Suite, or H Suite, are an alternative decentralized exchange leveraging the two native tools on Hedera. They do not use any form of smart contracts, and you can go on here now and actually trade some of the tokens. I believe the token list at the moment is fairly limited to just HBAR, H Suite, and SHBAR. Of course, two of those tokens being native to HBAR Suite. And of course, there are other tools on here, and they're looking to bring out new things going forward. We've got the NFT exchange, so you can provide NFT liquidity and earn fees, which is of course very, very novel, as well as liquidity providing. If there's enough demand, I will do a dedicated video on this, although it is not too dissimilar to, say, SourceSwap, and I've got plenty of tutorials looking at that. Of course, the key difference being these guys are not using any form of smart contracts. Wrapping up the video then, I wanted to talk about Hedera in this sea of red that we're currently looking at. And I think this is perfectly summarized by what Lehman said a decent chunk of time ago, and that, you know, the market will eventually slim down and there'll be very few remaining, or very few of these projects remaining. And you get this whittling down effect of, from start to finish. At the beginning, we see hundreds, if not thousands, of different projects and altcoins and possibilities. And then by the end of it, you have a few behemoths left standing. And seriously, based on what is happening across the board with the likes of Hedera in the ecosystem, Hedera is shaping up to potentially be one of those projects that is left standing. Of course, it has not as well been targeted by the recent SEC lawsuits. And of course, there's way more information on that as well, because Hedera has continued to be very regulatory friendly and engaged with majority of those regulatory parties, particularly in the United States, ever since its inception. It has taken all of this stuff very, very seriously, and it has played majority of its cards incredibly well up until today, and it will continue to do that in the future. And of course, that is another really bullish thing about Hedera itself as a project, and time will tell whether or not that will continue, but I believe it most likely will. Hopefully you guys did enjoy this video. If you did, leave a comment if you've got something to say. I do try and respond to as many of them as I can. A like, it does go a long way and helps the algorithms. And of course, you can always subscribe. Until the next one, I'll catch you then. Cheers.